Welcome back, friends. The United States has agreed to roll back over $33 billion in tariffs on Chinese goods at the part 1 of the US-China trade negotiation deal that was concluded yesterday, December the 13th. Yet, it has retained tariffs over $77 billion worth over Chinese goods spread across more than 5 categories. Now, this does come as some respite to the global stock markets because by reducing these tariffs, it is very likely that the earnings estimates of the companies would be revised upwards. It also diffuses the tensions across United States and China, and is on the whole quite helpful for the world economy. No wonder you saw the European stock markets rally substantially after news of a reported Part 1 US-China trade deal was announced. At the same time, although the Dow futures opened or signaled an opening of over 130 points on the plus side in the Dow Jones, it finally ended up flat, just 8 points up, as the understanding of this US-China trade deal negotiations began to percolate. Analysts realized that the numbers that were expected of the tariff rollback were much less than expected. Second reason could also be that you sell on the news. Nevertheless, one must understand that there are many thorny issues which still remain, and this deal is to be finally signed. The Part 1 agreement is to be signed in January 2020. Yet there are many issues pertaining to human rights. United States has been on the side of the protesters in Hong Kong, and this is a thorny issue between the US and China. Not only that, intellectual property agreements is also something which has been a major issue with the United States and China is yet to resolve this. So all these issues, and thorny in nature, and could end up in rattling global stock markets as more clarity emerges on the disagreements between the two sides. One must therefore take this signing of the agreement with that grain of salt. Do not forget that China is now over a $12 trillion economy. China is contributing to over 40% of the global growth, and it definitely would not like its jobs numbers to go down. It would definitely not like anything which could rattle Chinese growth numbers, and would definitely put its best foot forward. Yet, as these issues remain unresolved, definitely one cannot say that the US-China trade agreement has been concluded peacefully. There can be many more things which can come and rattle and come in between, so do not be overconfident. And I believe some of these issues could come and rattle markets around Christmas, and the much anticipated Santa Claus rally will not materialize this year in 2019, and also 2020 you will not see the Santa Claus rally that one normally expects around this time of the year, with little bit of Christmas cheer to support. Donald Trump has been on a tweeting spree. Yesterday he has made over 115 tweets, a record by Donald. The 77 was the number on Wednesday. Last Sunday was 105. So he seems to have increased the number of his tweets as the impeachment proceedings in the United States gather momentum. Impeachment proceedings against Donald Trump's involvement in the call to Ukrainian president, and which could have an impact on the US presidential elections and in 2020, seems to be the bone of contention, on the basis of which Nancy Pelosi had initiated these impeachment proceedings against Donald Trump, although it is unlikely that this will result into an actual impeachment of the president based on the number of votes he has in the House of Representatives. Yet this definitely is another issue which could keep rattling American markets and therefore the world stock markets from time to time as these impeachment proceedings gather momentum. Yet, Donald Trump's tweets will always be welcome and they will always come to calm the global stock markets. In any event, I must conclude by saying that not only is the US-China trade deal far from complete, there are many imperfections yet. And another issue that seems to be developing is Scotland wants to remain a part of the European Union. And the Scottish Nationalist Party by Nick Sturgeon seems to have gathered good momentum in these UK elections. Therefore, it is quite likely that Scotland may want to be to not remain a part of the United Kingdom anymore. If that is the case, this can add to fresh tensions. Scotland seems to be extremely keen to remain a part of the European Union, whereas the rest of England, Britain, does not want to be a part. So this is another factor which could go and rattle global stock markets. Please be careful. Starting off next week would be very nice, very helpful. But as the midweek progresses, you can see the rally fizzle out and you could see a good correction down the road as well. Midweek correction could be seen in global stock markets. Happy investing. Take care. Bye-bye.